Well, good morning.
Good morning, Stuart.
Morning, Cor. We're going to have a little chat about what's going on in the market right now, certainly from the point of view of fund distribution. Before we get into that, maybe you can just give me a brief introduction to yourselves over there in Italy.
Yeah, sure. Well, we started our TPM activity about 5 years ago in Italy. Me and actually my partner, who is Italian. I'm Dutch myself, but we're both actually active in the Italian market for 15 plus years. So we have an extensive network here. Started this is 5 years ago. We're one of the few actually doing this in the Italian market. And it's been a wonderful journey. So we're actually pretty happy with our partners. Our partners are pretty happy with us, which is also an important element.
That's important. Yeah, most important. Whereabouts in Italy are you based?
We're based in Milan.
Right, so the north. And is that mainly where a lot of the investment decisions are made, or is it split across Italy?
Well, it is a bit split because obviously Italy is a big country and there's lots of activity also regionally. But you could say that the financial capital of Italy is Milan, absolutely, yes.
Right, okay. And you covered Italy and where else?
Well, it's mainly Italy, Stuart. So we can provide some consultancy services for other markets because I used to work in those markets as well. But the main focus is Italy for us.
Right, okay. And what do you see the main challenges in Italy at the moment? I mean, there's a lot going on. I just wonder whether that's, and I guess that's hidden Italy, not just about the situation in Ukraine, but generally in the markets, there's a lot of activity. What do you think are the main issues you've got there in Italy?
Well, I think in Italy, in general, the economic picture is pretty positive because we see a lot of EU relief funds were being released. There's a lot of investment going on in the country. There are reforms of the economy. So actually, the economy, the country as a whole is definitely moving in the right direction. And we're coming out of a period where people were relatively pessimistic in this country. So we're actually looking for a more positive spirit. And that will also lift, I guess, also the willingness to take a bit more risk, because usually Italians have been historically very conservative in their investment allocation, in investment positioning. It's very much fixed income, deposit-driven market. So a bit of positive spirit and a bit of entrepreneurship in their decisions would definitely help the market move more towards risky assets. Then again, obviously, we're now experiencing a period where a lot of geopolitical risk plays out in the markets, and that in the short term definitely increases uncertainty and actually will, in the short term, increase risk aversion in the market. But I believe in the medium term, it's definitely an interesting one. The main challenges in this market is I think at the moment, but that's a general challenge in the business, is oversupply. There's just too many players trying to enter the market or are already in, and that leads to fragmentation. And what you will probably see is a rationalization of investment portfolios where there will be more concentration, and that creates opportunities and creates risks. If you are a boutique asset manager and you're really good, outstanding in your peer group, it creates an opportunity. Yeah. If you are more middle of the road in terms of capabilities and you're not in the big league, then it will definitely create challenges as well. So all in all, it can go either way. What also is interesting, I think, at the moment is, given the volatility that we experience in the markets, it's definitely going to be an exciting period in terms of where the relative rankings will be of the managers that play out. And that also creates, again, for people who are able to weather these storms well, creates some good business opportunities.
I mean, I always find it interesting when investment managers come to a particular market, and we've seen this historically where they come into a market, they come from maybe the US or from Asia, and they don't really understand the market. And they come to people like yourself to try and understand Italy better, because hopefully you know it better than anybody else. What are some of the do's and don'ts that fund managers should do when they come into somewhere like Italy? What's critical for them?
Well, what's very critical in Italy, but I think that that goes for more European markets, but definitely in Italy, it's an important one, is to show commitment to the market. So you shouldn't expect to have some brilliant product enter the market and then in 6 months' time be having raised a lot of capital. It really takes time for the market to get to know you, to get familiar, to trust actually what you do, to monitor where your performance is going through time, whether it's consistent with what you say, etc. So any player that wants to enter the Italian market, our job is actually to explain very well what they're entering into, what kind of a commitment is expected, and what kind of services we can provide to support their efforts. So it's really like a dialogue and a partnership that we enter into more than a specific sales effort for a specific product.
I guess coupled with that, and it's something you touched on before about an oversupply. I'm sure you're no different to ourselves. Our door is constantly knocked on with people wanting to launch funds and create product. How do you, when you come to review a fund manager, what is it you're looking for, which helps you make that decision easier and makes you want to go with them ultimately?
Yeah, that's a good question, Stuart. One of the things that we do before we enter into more in-depth conversations is our due diligence. So we want to be sure that the manager itself, the organization is what it should be in terms of governance, in terms of risk management, compliance, that all the regulatory boxes have been ticked, that the investment process is solid, that the team, the track records, the performance numbers, that everything is in place, so that once we would start marketing a product in a professional market like Italy, because it's a very institutional market, then everything, we know that every box is ticked, at least. So it doesn't guarantee success, but we do know that you do stand a chance in that way. If things are missing, it's a no-go, to be honest, here, because it's just it's too competitive.
I guess you get a gut feeling, don't you? You'll sense it almost straight away. How quickly do you make that decision? Is it over the first minute, or do you spend a bit longer?
No, we do spend a bit longer, to be honest. But both Filippo and myself, we've been in this business for 25 years, so over 25 actually. So yeah, we've seen a lot. But
all the stories, yeah.
Yeah, exactly. But it's so yeah, the weeds from the chaff, etc. That you do get that, but sometimes it takes a bit more time. It's every type of strategy and every type of investment strategy has a different type of organization. If you look at boutiques, and a total return manager is completely different from a bond manager or a global equity manager, for instance. So we do get into the details, and then based on that, we decide whether it makes sense or not to move ahead and partner up.
Yeah, and when it comes to that decision process, I guess when you touched on it earlier on, it's about commitment. What sort of commitment does a manager need to make to go into a country like Italy to make sure it works for them? And what sort of commitment, and actually, what sort of commitment are you looking for? Is it physical? Is it, webinars? What sort of things that you're looking for from the managers?
Yeah, it should be clear for managers that enter this market that it's based on relationships and partnership. So what we expect from our clients is to commit themselves to this market and not basically use a hit and run approach. So if you decide to enter the Italian market, first of all, we work on a retainer basis. So it's not a huge retainer, but we do require a retainer because on the one side shows commitment from our clients to us and to our market, and on the other side, you should not expect to have any sales in the first 12 months in Italy,
right?
Unless you're very lucky, but in general, that is just not the case. It's something that grows over time. It can be very profitable because it's a very large market, but it does require time. And so this should be very, very clear. It is a commitment from our side in terms of spending time and spending our network and our resources. There's a commitment from the client side in terms of a contribution to our costs, and in terms of commitment with timelines and patience, basically.
Right. And why is that time commitment so important? As you say, it could be up to 12 months. Is that because of the due diligence and the research that goes into the managers by the clients, or is it just takes that long? What's the actual reason?
No, the typical sales process is one where basically a manager is introduced. There is an interest raised. They start a due diligence process. If that due diligence process is finished, and that usually takes up to 6 months, then they may decide immediately, or they may decide to wait to invest. If they start to invest, it's usually a small position. Because then it starts basically feeding their systems. It starts to work into their performance attributions, portfolio management systems, etc.
Right.
And then based on that, it can grow. And I've seen instances where it has grown over 500 million. But it starts like that. It's always the same.
Right.
And that means that the client has plenty of time to get to know the manager, to see how the track record evolves. To meet these people several times, to evaluate very well what kind of investment that they're doing.
Mm. And I know here in the UK, it's quite critical to make sure you've got a good size fund before you go to market. How important is seed investment to the fund when they go out to launch a product?
Yeah, I would say the minimum fund size, more or less, is 100 million here. Below 100 million, most clients have limits of up to 10, maybe 15% of fund assets.
Yeah.
They're not willing to enter into a due diligence process if they can only invest 5 million, for instance. It just doesn't pay off. So it's not that they're not curious. It's just an institutional limit that they apply.
Okay, so and that's because of the size of the overall investments that they're managing will be in the billions, and they'll have a limited allocation, right? Okay, so that would, and I think you touched on it again earlier, which is the market is very institutionalized. Is it?
Yes.
Who are the drivers? Is it the banks, insurance companies? What does that look like?
Basically, the largest share of wealth is managed by banking groups. Mm-hmm. And they usually have also some insurance activity within their groups. So they distribute these products throughout their wealth management, retail distribution, insurance policies, etc. So the main gatekeepers are the large financial groups, large banking groups, I would say. Obviously they are highly institutionalized and highly professional players. And then next to that, you have the purely institutional market, and that's split between pension funds, mm-hmm. which are not large if you compare it to the Italian economy, but strongly growing. So it's nevertheless an interesting market. And the banking foundations, basically, those are endowments that have been created with the sale of public banks to private markets. So these foundations are decentralized. They're usually linked to the place where the bank used to have their head office. But they are interesting players as well to target. Those are the main drivers. Family offices are relatively limited in Italy. Most wealthy Italian families manage their money offshore.
Offshore.
Yeah.
Okay. Thank you for that. And it's quite topical at the moment because in a market where there's lots of things going on, what do you think is hot at the moment in Italy? What are people looking at? What are investors reviewing at the moment based on the current marketplace?
Yeah. Yeah, it changes every week, I guess, but
yeah, it changes every day sometimes.
Yeah, exactly. No, I think in a market like this, the holy grail obviously is total return management. So managers that are able to protect wealth in choppy market conditions. So that's definitely an interesting area. Having said that, most total return managers didn't live up to their expectations in the past. So it's a very competitive market, I would say. But if there are good players, then there's definitely room to grow significantly.
And is it biased towards equities and fixed income, or is it the balanced approach in Italy?
Yeah, it should be balanced, but relatively dynamic.
Right. Okay.
Yeah.
What about alternatives of people investing in things that like real assets, anything like Digital assets, maybe.
Digital is not a big thing here in Italy. To be honest, I think they're right.
Yeah, I don't think it's big anyway. Everyone talks about it, but I think no one's actually doing anything with it. But what about real assets?
It's too early stage. I'm not saying that it will not grow into something meaningful, but at the moment I would, especially given the risk profile of the average client here in Italy, it doesn't make any sense. On the other hand, if you look at real assets, then there's definitely more appetite. It's growing appetite from the institutional side since 5 to 10 years. They're increasing their allocation to private equity, private debt, renewable energy. I think on the wholesale side, on the banking side, obviously there are challenges operationally, right? So how do you include a less or non-liquid asset in a liquid portfolio? That's always a bit of a challenge.
And this is what between UCITS and AIFs. Yeah,
exactly. But having said that, there are some very interesting initiatives from these large groups that are creating vehicles for their ultra high net worth clients to actually start offering these things, because obviously there is a demand for those instruments. And they're even speaking about lowering the minimum amount you can invest in these vehicles in Italy. That stands now at 500,000. Well, that limits obviously the target group of clients quite severely, because you don't want to have more than 10-20% of those instruments in your portfolio. So that they're actually now speaking about lowering it to 125k. So that would be very interesting, because it expands the target group quite significantly.
Okay, interesting. Cool. It's been fun catching up. Let's do this again soon. But in the meantime, let's leave it there, and I'll wish you all the very best. You take care now.
Yeah, you too, Stuart. Thanks a lot, and hope we'll see each other in Milan next time. We'll do it together.
I'll know what to order at the restaurant. Cheers.
We can always help you there as well.
Thank you. Take care.
Okay. Cheers.